President Donald Trump just dropped a bombshell. In a White House meeting, he announced the CFTC is working to bring Hyperliquid into the United States. The decentralized exchange that handles billions in perpetual futures trading could soon go fully onshore, and hype jumped 11% in hours. Hyperliquid isn't your typical crypto exchange. It's a blockchain-based platform built from the ground up for perpetual futures, contracts that let traders bet on price moves without owning the asset, and they never expire. Think of it as a decentralized version of Binance Futures or DYDX, but faster. But Hyperliquid is evolving fast. According to a July 2026 report, real-world assets, think commodities, equities, indices, already make up 52% of its trading volume. By 2027, that number is projected to hit 75%. Hyperliquid is becoming the on-chain home for everything from oil futures to Apple shares. The engine behind all this is HyperBFT, a custom consensus algorithm that pushes 200,000 transactions per second with a block time of just 0.07 seconds. That's faster than Solana, faster than any Ethereum L2. And every trade, cancel, and liquidation happens transparently on-chain with one-block finality. Hyperliquid is non-custodial. Unlike Coinbase or Binance, it never takes control of your funds. Users trade directly from their wallets. That's a huge selling point in a world where centralized exchanges have repeatedly failed. FTX, anyone? Then there's the HyperEVM. Launched earlier this year, it's a full Ethereum virtual machine built directly into Hyperliquid's core. Developers can deploy smart contracts that interact with the exchange's liquidity, think lending, borrowing, or automated trading strategies, all with the same speed and security as the perps market. The native token, HYPE, is central to the ecosystem. Users stake HYPE to validators, and an active set of 27 validators secures the network. The current price sits at $76.11, just shy of its all-time high of $77.62. Market cap? Over $19 billion. But it hasn't been all smooth sailing. In a single hour, 3 Hyperliquid whales lost a combined $194 million as Bitcoin squeezed higher, liquidating massive leveraged positions. That's the brutal reality of perps trading, even on a decentralized platform. And the big players are watching. CME Group and ICE, the giants behind traditional futures, have reportedly warned the CFTC that Hyperliquid could enable market manipulation and sanctions evasion. They're pushing for scrutiny, worried that a decentralized rival might eat their lunch. Yet the momentum is undeniable. Arthur Hayes, co-founder of BitMEX and CIO of Maelstrom, has renewed his bull case for HYPE. He points to record-breaking open interest on HIP-3, Hyperliquid's staking and fee-sharing mechanism, as proof that the network effect is accelerating. HIP-3 is a governance proposal that introduced staking rewards and fee distribution. It's effectively turning HYPE into a yield-bearing asset. The more volume the exchange handles, the more fees flow back to stackers. That's a powerful incentive for long-term holders. There's also HIP-4, which introduces prediction markets directly on Hyperliquid. Users can bet on real-world events, elections, economic data, sports, all settled on-chain. It's another step toward becoming a full-spectrum financial platform. Hyperliquid's roadmap includes geographic expansion. With Trump's CFTC opening the door, the U.S. market, the largest capital market in the world, could soon be accessible. That would be a game-changer for volume, liquidity, and HYPE demand. But bringing Hyperliquid onshore isn't simple. U.S. derivatives exchanges face strict rules on registration, customer protections, and market oversight. Trump didn't specify what an onshore version would look like, but the CFTC is clearly exploring the feasibility. Meanwhile, the platform continues to attract institutional interest. Multicoin Capital recently moved about 172,710 HYPE, worth over $10 million, according to on-chain tracker OnChain Lens. That's a vote of confidence from a top-tier crypto fund. Hyperion DeFi, a company building on Hyperliquid, partnered with Blockdaemon to support staking operations. And Hyperliquid Strategies Incorporated was just added to the Russell 3000 and Russell 2000 indices. The ecosystem is maturing fast. So what's the big picture? Hyperliquid is positioning itself as the infrastructure for all finance, crypto and traditional. The vision, just as electronic trading revolutionized markets in the 2000s, Hyperliquid offers a transparent, efficient, and resilient blockchain alternative. The numbers back it up. Hyperliquid currently has a 1% dominance of the total crypto market cap. With $1.57 billion in daily trading volume and a circulating supply of 252 million hype out of a max of 952 million, there's still room for growth as more tokens unlock. But there are risks. The CME and ICE lobbying could lead to regulatory hurdles. The whale liquidations show the dangers of leveraged trading. And the token unlock schedule could add selling pressure. Every investor should do their own research. Nevertheless, the Trump announcement has supercharged interest. Hype is up 35% in the past week alone. Traders are betting that onshore approval will unlock a flood of institutional capital. And if the RWA pivot continues, Hyperliquid could become the go-to platform for tokenized everything. One key metric, Hyperliquid's open interest hit a record high after HIP-3. That means more traders are committing capital to the platform, betting that the trend continues. It's a vote of confidence from the market. And the technology keeps improving. HyperBFT can handle 200,000 TPS with a 0.07 second block time. That's faster than Visa's peak capacity. For comparison, Ethereum does about 15 TPS on L1. Hyperliquid is in a different league. The HyperEVM also means developers can build DeFi apps that directly access the perp's liquidity. Imagine lending protocols that use perpetual futures positions as collateral, or automated market makers that hedge with Hyperliquid. The composability is powerful. But back to the whale story. 3 whales lost $194 million in 1 hour. That's a stark reminder that leverage cuts both ways. Hyperliquid's liquidation engine is ruthless, it's all on-chain, transparent, and unstoppable. Despite the risks, the ecosystem is growing. Hyperion DeFi's partnership with Blockdaemon shows that traditional infrastructure providers are taking notice. Staking as a service is becoming a big business. And the Russell 3000 inclusion of Hyperliquid Strategies Incorporated is a milestone. It means a company tied to the Hyperliquid ecosystem is now part of a major US stock index. That's a bridge between traditional finance and crypto. So where does Hyperliquid go from here? If the CFTC gives the green light, we could see a regulated US entity offering perpetual futures to American traders. That would be a first for a decentralized platform. The implications for the entire crypto derivatives market are enormous. And the RWA Pivot means Hyperliquid isn't just a crypto exchange anymore. It's becoming a marketplace for everything: stocks, bonds, commodities. The line between crypto and traditional finance is blurring, and Hyperliquid is at the center of it. Thanks for watching. If you found this breakdown valuable, hit that like button and subscribe for more deep dives into the biggest stories in crypto and finance. And comment below, do you think Hyperliquid will become the backbone of on-chain finance? Let us know.